What is going on YouTube? It's Sank and we are back with another one. Now in this drop, coming at you with a couple of plays on the put on your radar. But before I kick things off, if you'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so it's that time, we've hit the weekend. But you know, I never take my eye off the ball when it comes to these markets. That being said, I've got a couple of plays of interest on the put on your radar and the intel you need to continue hitting success in these markets. So let's run the first one. The first one I've got for that's ticker symbol RBLX, that's Roblox. And we've got to touch on this play because this was an MVP play in Friday's trading session. On the day they're up almost 10%. And this is a play I'd like to frequently revisit with you guys. As a matter of fact, last time we spoke about this play, this one's standing at $64. Now we've seen them make their rise up to $82. But I'll let you guys know there's no compelling case to pick this one up where they're at $82, because we know the market is still volatile right now and the overriding theme still remains inflationary fears, and these will come back into the picture. And when it does, you can see all of these growth plays come down a notch, including Roblox. But as they do, it just opens up attractive entry points to load up on these plays and ride the wave back up. Now when this play comes down, it's guaranteed to come back down into the 70s, very likely to touch the 60s again. But as I say, just opens up attractive entry points for those who weren't on board to get on board and ride the wave back up. Now what you got to know about Roblox is this is a very expensive play when it comes to the valuation. That's why you see the wild swings in this stock price. Seen it hit over 80s. We've also seen this one in the mid 60s just a couple of trading sessions ago. Now as I always say, with these plays you got to know your exit strategy from the jump. It's super important. So with Roblox, you got to know if you're in it for the short term or the long term. Now with these plays that have that high price tag attached to them, I like to use them as short term plays. If you think of Marathon Payton Group, for example, or Avuzi. But a bit of extra strategy for you guys, if you are in this one short or long term, it's a good idea to have your stop limit on this one set just below support at around that $62, $63 mark. So in case there's any extra downwards volatility, it can cash you out of the play. What you got to know about Roblox is the market is being very kind to Roblox right now. The market is being harsh to plays that have the kind of structure Roblox does, that highest price tag in the growth space. I want to let you guys know, if the market really wanted to, it could swallow Roblox whole without a shadow of a doubt. So just ensure when you're in this play, you guys are setting your stop limits on this one and using the correct method to hit success in the play. Let's move to the next one. The next one I've got for you, that's ticker symbol GRWG. That's Grow Generation, coming in at $37. Now in the last trading session, this one was down around 4%. Whenever these plays move up or down, I'm always looking to understand the reason why. In the case of Roblox, they were up, not because of a partnership or an acquisition, or even because of good company earnings. That stock was up simply because they reacted favorably to an article that was published. Now this is a weaker catalyst, so when you see this kind of price movement off the back of a weaker catalyst, you can be prepared for that stock price to come back down. Now in the case of Grow Generation, they were down because management decided to sell out of their position. Now the markets are always going to react unfavorably to this type of news. That's why you've seen this one come down, but it's one that we shouldn't read into too much. We should pay more attention to the company earnings and the direction they're going in. Now we know last company earnings, they obliterated street estimates, both on a revenue basis, and they even had a profitable quarter as well. Also, they've increased guidance going forward, so they've got the momentum there. So that is what we should pay more attention to. Now also check this out. We know support on this one comes in at $37. So it's natural off the back of this type of news, we're going to see this one come back down to support. Now, management gonna have to sell out of the position at some time. We see several plays where management do that. Think of Palantir, for example. Another good example is also Marathon Payton Group. Management sold out, saw that stock price rise over the next couple of weeks and months in the play. So it's not always an indication of where that stock is moving. But regardless, this is a stock that has that momentum and they got the favorable industry dynamics behind them as well. And as I always said to you guys, worst case on this play, you could see them around that $32, $31 mark, because that's where the next support will be. So if the market does turn, if inflationary fears come back, that's where you'll see this one most likely end up. But that's why we nibble at these plays. We don't go all in, we grab some stock, wait to see how they perform over the next trading session. If we can catch a cheaper price, we grab them there. So what I'm looking to do is I'm looking to increase my position at this current price. Currently have 125 shares in this one. And you guys know the aim is to get this one up to 200 shares, because At this current price level, the momentum they're going in, this is going to be a double money play. I'm looking to secure the bag on this one. So that's why I say I'm getting my position fully built out, ready for that stop price to climb. Let's move to the next one. The next one I've got for that's ticker symbol SNAP, that's Snap Inc., coming in at $56. This is one of these plays, I call them a silent assassin, because although that stock price isn't showing too much action, and over the last 3 months since the beginning of March, this one's been trading flat, i.e. consolidating. This one's hitting their business objectives. Just this week gone, posted up another acquisition, so they're moving well in that augmented reality space, and they post up some good numbers and metrics, but they're not getting rewarded when it comes to their stock price. But we know the market is moving wonky right now, especially for these growth plays. But this just gives us an opportunity to catch them at a good price point before the big players in Wall Street jump on and drive that stock back up. When it comes to this stock price, this one's got very good support at that $50 mark. So the closer you catch them to $50, that is as good an entry as it's going to get for this play right now before they make their climb. Now, last time we spoke about this play, which was a couple of weeks ago, I said the way you're going to continue to see this one pan out is they're going to consolidate between that $60 and that $50 mark until the market is ready to release these plays. You guys know the market's got chains on these growth plays right now. It's not letting any of them fly, especially these high growth profile plays. And that's exactly how it's panning out at the moment. Now, as always, you want to ensure you know the main drawbacks in all of your plays. And with Snap, it's the same as Roblox. It's an expensive play. So you want to ensure you know your exit strategy, whether you're short-term or long-term in the play. Now, what I'm looking to do is I'm looking to ride the wave on this one, take them up to that $70 mark or beyond once the market is ready to release this play. At that point, I'm looking to take profit on the play or increase my stop limit. Alright guys, so those are the plays I've got for you in this one. Now I remind you to keep your portfolios well diversified. Today was heavy on the growth plays, but there's a place in the portfolio for those plays that are going to benefit from inflation, benefit from economic reopening, and plays that I've told you guys about before. SLM Corporation, ticker symbol SLM, and also Citigroup, ticker symbol C, is another one on a put on your radar. Now the way to do it is, as the dollar value increases in your portfolio of growth plays, ensure that plays outside growth are also increasing in line, just to give you guys that balance you need for your portfolios. So if you've been rocking with the channel, you know what time it is. Question is from OG Extreme, says, how can I learn when it's the best entry point for stocks? I mostly buy for long term, but I have trouble knowing when to buy. So to round this one up, I want to share this one with you guys. Now, it's a good question because whether you're long-term or short-term in the play, entry point is key and it's a determining factor for your success in the play. Now, there's many ways you can do it, but I like to use support lines as a good indication of when to get in at the right time in the play. Now, there's several plays on my radar. Even a player like Roblox, for example, that's just trading way above support and it's not ready to be picked up in the market. So you want to be mindful of that. You should have a watch list for certain plays or all the plays you're looking at, and once they hit the right entry point, then it's time to pounce on the play. But as I say, I like to use support lines to get into these plays. Using Roblox as an example, Roblox currently standing at that $82 mark. That's too high for me to pick up at the moment. I know there's going to be some volatility in the market, so when I see this one dip down closer to that support line, which is around that mid 60s, that's an opportune time to grab the play. Now, support lines typically do hold up in this market, but if there's some extra downwards pressure, for example, if inflationary fears come back, then a lot of these plays are likely to break through support, just like we saw a couple of weeks ago. Now, if that's the case, that these plays break through support, what I tend to do is not pick the play up right away. What I like to do is see how the play performs. If they fall down to their next support, that's when I grab the play. Or if they show some momentum and rise back to that previous support, that's when I buy the play again. So that's called the buying in strength maneuver that I've taught you guys. But it's important that you guys do focus on your entry points in this play. Be patient with entry. I know I put plays on your radar. A lot of you guys want to grab the play as soon as I speak about the play, but it's key that, again, you guys just wait for that entry point. Another good example is High Tide, for example. When I was speaking to you guys about High Tide, this one was above that entry zone. Now, just a couple of trading sessions later, you've seen this one dip into the buy zone. So it's about these patient, strategic moves in these plays. And once you get them at the entry point, even once you pick the share up, if you see that play rise, especially in this kind of market condition, wait for them to fall back down to support. It might take a week, it might take 2 months for them to come back down to support. But if you look at the trading patterns, especially in this market with these growth plays, a lot of them tend to fall back down to support, and you could pick the play back up again. That's your second chance. That's why I said put plays on your radar each and every day. Plays are in their entry points, buy zones, to let you guys know exactly what to scoop up in the market or to put on your watch list so you guys are ahead of the game. Alright guys, so that wraps it up for this one. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Now as we progress through the weekend, you guys know I'm turning up the heat to ensure you guys are prepped and ready to crush next week in the markets with me. So I'll catch you in the next one.